Let's now go across to Seth Freeman, Chief Executive Officer of EM Capital Management, joining in to take us through all the global action this morning. Morning, Seth. Thanks for joining in.
Morning.
Seth, to begin with, let's talk about the latest developments across Asia. North Korea, after 2 months of quiet, has once again fired a missile, but the reaction to that across Asian equity markets is fairly muted. Do you think we've gotten used to the cycle of missiles being fired and nothing really serious coming out of it?
Well, sitting here in San Francisco, I would hope that being a prime target, I would hope that it's taken a little more seriously. I'm not exactly sure, what the world is necessarily waiting for, particularly given the fact that this launch has indicated they have the capability of reaching just about any place in the United States.
Right. Seth, also, what are you making of the recent developments towards those corporate tax reforms in the U.S.? How likely is this timeline that the markets are expecting looking likely?
I've been following it very closely today, and as we know, the Senate committee passed it, and I think something will pass. Actually, there's some question about whether this fact that the corporate tax rates are set to be permanent and individual tax rates are set to change in 4 and 10 years is a political problem. And there's some movement there. Today they announced that the carried interest treatment, which really affects, frankly, general partners in hedge funds, some of the richest people in the world, very favorably, that's still in the bill, and that could be controversial.
Right. Also, consumer sentiment, spending has improved to a 17-year high. You have a new Federal Reserve chair. Are all these or rather, of course, consumer sentiment is a positive, and of course, you've got a GDP data as well expected later this week. How important are these triggers going to be for the market and for fund flows internationally going ahead?
Well, of course, with an economy that's 70% consumer-driven, consumer sentiment is critical. We had heavy spending days that over the Thanksgiving holiday and yesterday, and I think that bodes well in general. A bullion is good. We're looking at Bitcoin going crazy. We have Mr. Bogle from Vanguard saying stay away. And I was at an event today where there's a newly launched Bitcoin fund of funds making a presentation. So we have these things converging in terms of fund flows. I think we might actually see more flows coming into the United States.
All right. Also, Seth, very lastly, we're going into holiday season, and at a time like this, historically, global equity markets tend to go into a quiet mode. Are you anticipating the next couple of weeks to be all about consolidation and no major swings on either sides?
I think it depends on how the tax bill goes. I think the rise that we saw today reflected expectations of the tax bill going through. There could be some disappointments there at the last minute. I also think we're going to see some. It may be that we see some, profit taking, particularly in emerging markets, as we wind down the year. And one of the other things that happens, of course, is when volumes drop down during the holiday time, it causes market distortion because it doesn't take a lot of trades when the volume is low to move stock prices and move overall market indices. So we may see a little extra volatility towards the end of the year as well.
Well, so gear up for further volatility over the end of the year, which is only a few weeks away now. Seth, also very lastly, a large part of a rate hike by the Federal Reserve has been talked about over the last few months now. I think Janet Yellen has made it clear more than once that there is a rate hike as early as December. And of course, Jerome Powell is also not mincing his words. He said there are factors coming together for a case for a rate hike in December. What does that mean for equity markets, and what does that mean for the dollar as well? Because more importantly, what I'm trying to understand is how much of this is already in the price, and hence get a sense from you what the reaction of this rate hike could be.
I think there won't be much of a reaction. I do think it's fairly baked in. And as you said, sentiment is high. There's expectations for earnings and some earnings growth coming. We're looking at some old line cyclical stocks are high. So I think it's just going to kind of pass and not be much of an event this year.